Welcome to Texas Capital Live. I'm Steve Kennard, president of the AI Innovation Association. With me is my co-host, Lee Bratcher, president of the Texas Blockchain Council, and our entrepreneur in resident producing the show, JBA. And we're happy to have you with us. So much going on in the markets today. Texas Capital Live is all about promoting the future of finance being built here live in Dallas, Texas. You can join us on October 8th at the TexCap conference. Go to texcapcon.com to register. On October 8th, we're going to have presentation, keynote speeches from the Texas Stock Exchange, the new exchange being open here, from the New York Stock Exchange, from NASDAQ, all of whom have moved their office here. We were also happy to recently announce that the governor of Texas, Greg Abbott, will be participating in the event as well. Again, that's the TexCap conference. Go to texcapcon.com to join us on October 8th here in Dallas. Lee, I want to kick off the show by focusing on a controversy that's kind of rippled throughout social media and has broadly, elicited the input, I think, from a lot of leaders, both in the political realm and in the business realm, which is this discussion around immigration and particularly most recently the H-1B visa. And before we kind of get into the discussion, to just set how this all happened, as is kind of becoming common practice, every week we get at least sort of one White House press release event where it's this kind of long, open-ended discussion that the president hosts in the White House and typically has different cabinet members come and talk about the executive orders that are being rolled out. So this time that was no different. The Secretary of Commerce, Howard Lutnick, was in the White House with the president. And I'd like to see if we can start, JBA, by, we had a short video of Secretary Lutnick talking a little bit as they launched an initiative around the H-1B visa program. Do we have that video, JBA?
Yeah, just here we go.
Opening this up. I think our audio is muted there. So we're going to work through some technical difficulties, but the reason we wanted to share the video is Secretary Lutnick kind of tees up this executive order of the president on H-1B visas, and particularly announcing a cost element to the application process of $100,000. And do we think we have the video?
Yeah.
Let's give it a shot. All right, well, so we'll just move on. So the secretary lays out that there's a $100,000 fee, and most importantly, in the way he lays it out, he talks about this as an annual fee, which would be a enormous change to the process of the H-1B visa. Pretty much right after that, though, this is where the controversy and the confusion started. You had the press secretary, Caroline Leavitt, who followed up in a post and had to clarify these statements. It says, to be clear, this is not an annual fee, says the press secretary. And this is kind of right after this announcement. It's a one-time fee that applies only to the petition. Those who already hold H-1B visas and are currently outside the country right now will not be charged $100,000 to re-enter. H-1B visa holders can leave and re-enter the country to the same extent as they normally would. Whatever ability they have to do is not impacted. And this applies only to new visas. So at this point, there'd been a lot of confusion with the initial announcement. There were kind of shots being fired back and forth. And one thing that surprised me is one of the early kind of responses that we saw to the rollout of this new policy was from Reed Hastings, the CEO of Netflix, hardly a right-wing commentator, more famously, major Democrat donor. And he says, I've worked on H-1B politics for 30 years. Trump's $100,000 per year tax is a great solution. It will mean H-1B is used just for very high value jobs, which will mean no lottery needed and more certainty for those jobs. So Reed responding there to the $100,000 a year. Now it's been pivoted and clarified that it's $100,000 for the initial petition. And for me, Lee, it started to make me really think about this deeply, it's a little bit personal to me because my mom is a legal immigrant to this country. She came from Panama, so that's always been a part of my upbringing. I've always had a very positive view of the contributions that many immigrants make. However, the more I learn about this H-1B visa program, I find myself really zeroing in on two things. First, the lack of a cost to this program to me seems hard to defend. That you're going to have people coming in from outside of the country that are accustomed to much lower wages and not applying some financial incentive to have companies invest in training their own American workforce. The second piece, which I think hasn't been touched on as much by the administration, is the lottery aspect of the H-1B process, which is another way of saying that merit doesn't figure into it. There's way more demand than the 85,000 annual cap. That is the cap on H-1B visas to come into the country. Applications far exceed that. And the way the current program actually allocates the visas is through a lottery. And so to me, kind of this next chapter in talking about this is, does that really make sense? How do we make this work for America broadly, but also continue to honor what I think is part of our fabric, which is if you're a hard worker, or if you're a law-abiding citizen and you want to build something for the future, you can come to this country. The way this H-1B visa program is currently constituted, even with the $100,000 petition fee, in my opinion, is very hard to defend for me. I think the annual fee made a lot more sense. You even had the CEO of Netflix already chiming in on that. I'm interested to get your take kind of on how this was rolled out. What was your gut response? And then having had some time to kind of digest it a little bit more, where are you feeling on how this has been communicated?
Yeah. So, currently before this proposed $100,000 fee, there's about a $5,000 cost to have someone go through the process and enter into the H-1B lottery. And, 5,000, probably too cheap, probably not high enough a barrier there, but 100,000, in my opinion, was a bit stark. That's like a 20x increase in the cost.
Yeah.
And I think Vivek Ramaswamy put this well in a Twitter post. He didn't go out to and like confront or criticize this program, but he basically laid out some logic that said, hey, we should not be the same way that we shouldn't be overly coddling and protecting certain industries like the steel industry or other industries. I mean, industries do have national security importance. So I understand the semiconductor industry and even steel and manufacturing to some extent, but to the point where it looks like subsidizing industries, making them non-competitive. They're able to rest in their laurels a little bit more. That's what I'm concerned about with the labor market in the United States.
Mm-hmm.
If we insulate ourselves too much from foreign labor, then we're further entrenching this view in the American workforce that this view of entitlement. We are entitled to good paying jobs. We're entitled to, work a 35-hour, 40-hour week and make plenty of money with doing work that's either mediocre or maybe it's really hard work, but it's not economically, the market is not showing signals of, what is, more productive for the economy and what is less productive for the economy.
Yep.
So my concern is more from a cultural malaise perspective. We're not sending the right signal to American workers. The signal that President Trump's sending is we're going to protect you from competition. I do not like that concept. Now, I don't mind the concept of bringing revenue in for high paid tech workers predominantly. That's, I think all good. If they want to pay it, they can earn more here. They're more productive here. And the U.S. government gets a little bit of a, revenue to, soften the tax burden on the taxpayer. That's a win-win-win all around.
Yeah.
But my thought is this is such a stark departure, 20x increase in the fees. The biggest concern I have is giving a false sense of security and insulation to an American workforce that is already a little prone, especially after kind of the 90s and 2000s, being the dominant economy in the world for many decades now. we're a little bit prone to resting on our laurels and entitlement.
Yeah. So it sounds like at least there's, I think, an agreement between us that the current hurdle is too low. Yeah, financially. I'm at 100 grand's not enough. You're at maybe it's somewhere in the
A
middle.
doubling would have been fine. You get more you double the revenue in, but you're not sending that crazy signal to an American worker that it's okay for you to be $100,000 per year less productive than your peer labor workforce around the world. That to me is a very risky proposition.
I'll give you this. You have a valid kind of characterization of a lot of the debate has been around, insulating the American labor market with this fee, which is frankly more the lens that I view it through. I think you're articulating another side, which is whatever that fee is also a way to indicate to the American labor force, this is how much less productive you can be than some external country. I can appreciate kind of the different take that you're putting forward there. It does make me think, at least. I want to pull on another thread, though, within this kind of broader debate, because this has all been about the H-1B visa program. Of course, that's not the only visa program. So I'm going to read a post here from Guillermo Roch, I hope I'm pronouncing that correctly, who is from Argentina, Silicon Valley based now, serial entrepreneur. He says some facts. The visa that's been fueling Silicon Valley is the O1, not the H-1B. It's called Individual of Extraordinary Ability. It costs about $1,000 to apply, and it's unchanged. But what it also costs is the burden of proof of contribution. It's the visa I got as an Argentinian national, and it put me through the ringer. As evidence to obtain it, I had to submit being a widely published book author, along with other numerous things he lays out of his accomplishments. He says, I believe any reward as appealing and compelling as getting to move to the United States is bound to face widespread abuse. The best possible immigration policy will balance keeping the bar really high, ensuring people who love this country, culture, and values are willing to work hard to get their shot at the American dream, but never doing so at the expense of those already here. And I wanted to pull up a few stats just to think about this juxtaposition of the H-1B program and the O-1 visa that he talks about here. So again, the H-1B visa, while it's kind of billed as high skilled labor, it does typically require a bachelor's degree at a minimum, is 85,000 cap a year. The O-1 visa has no cap, but you have that extraordinary ability test. And
do we know about how many a year get the O-1?
So it's saying here, total issued, so this would be for 2024, was under 20,000.
Okay.
So a fraction of the H-1B, which is what you would expect, given that there's that higher threshold to kind of demonstrate greater ability. But where things really started to jump out to me is over time how this is compounded. In other words, the H-1B visa, I think, was launched in 1990, and pretty much every year hits that cap. So you get the max coming in every year. And so over time, that has built up where there are 730,000 about H-1B visa holders in the United States today. They also get to bring dependents in. And so if you come in and your spouse comes, they also get a visa to work. And that's about 550,000 more people. So you're talking almost 1.3 million total in the H-1B program. Whereas the estimate for the O-1 total over time, because there's no kind of annual tracking that's been disclosed that I can find, but total, you're talking about 20,000. So orders of magnitude difference. So are these the end all and be all of kind of the only two ways to approach it? Well, no, that's not what I'm saying. But what I think is interesting is the way that this kind of lays out just how much different things might be if there were a higher bar testing kind of what's the kind of contribution that a person coming to the United States might have. I'm hopeful that this is kind of the debate that we're going to continue to have around this. I'll say here as well, at least according to AI, that the acceptance rate once applied for the O-1 was about 90%. So most people who go through that ringer of filling out all the documentation end up getting the visa. I think Guillermo pointed out, anytime you have something as desirable as U.S. citizenship, I'm sure there are O-1 visas that have gone to people that we're probably fudging paperwork. You're never going to get that down to zero, but at least it's something that's not just a lottery. You get people coming in and you create a dynamic I'm very uncomfortable with, which is kind of this indentured servitude. You come here with a company that sponsors, you have to have a sponsor to come in H-1B, and you cannot move. You're kind of beholden to that company, and you create a different treatment, disparate treatment for different participants in the labor pool. I don't think this discussion is going away. I think it's only kind of ramping up. And what we've also kind of seen from the Trump administration a lot of times is you kind of throw something out there, you get some feedback, and then there's an evolution over time. So for better or for worse, they do seem open to feedback from not just industry, but the voting public broadly.
Yeah, I think part of the problem, though, is the voting public in general is going to be happy to have that protection, that insulation from competition. And I just don't. It's kind of like I'm certainly happy to eat pizza and donuts all day. Is it good for me? No.
Some tough love from Lee here for the labor force.
Some tough love for the labor force, particularly because immigrants are so they have contributed, in an outsized way to the economy over the last several centuries in the United States. And I say this,
that's undeniable.
It's undeniable. Yeah. And my family on both sides, I can track back the family history to before the revolution from my mom's side and the dad's side. Yeah. I have been here about as long as any European immigrant can have been here. Yeah. And I think, what we don't want to have happen is what happens in most wealthy societies over history. They do put up protectionist barriers. They do insulate their workforce to make them more comfortable. And then they're overtaken as a society because there are countries and cultures that are out there willing to work harder. And I'm not saying it's a cultural or sociological phenomenon to work harder versus another. What I am saying, though, is it is sort of a cyclical, if you've ever read like The Fourth Turning, there are generations that are accustomed to harder work. And it's not really about, is it Eastern culture or Western culture? It's kind of regardless. The Eastern culture was pretty lazy in the time of like the Qin dynasty, right?
You have ebbs and flows.
Do you have ebbs and flows in these cycles? And right now we are at the risk of not extending sort of this, 20th century, phenomenal century for the United States, kind of Pax Americana post World War II. And from an economic perspective, we are at risk. Our global share of GDP is declining. We're down below 25% of global share of GDP. I think we're probably approaching 20% now.
Right, big
of global GDP. Our per capita income is down relative to where it was a couple of years ago and where other nations are. So just because we are still the largest economy in the world, we can't rest on our laurels, and that's just my take.
Okay, I think you've made a compelling argument there. I'm not going to say I've come completely over to your side, but your argument, I think, is sensible. Also, you can't deny you see a lot of like the family-run companies and future generations, if they're too much, coddled and brought up with a sense of entitlement, you see those businesses tank. That's a story as old as time. So that risk is definitely there. Let's go over to the policy side on this, though, because on the heels of this this is an executive order we've been talking about. So over in Congress, you've had Senator Jim Banks, I think he's from Indiana, who's put forth the American Tech Workforce Act. And there's a couple of kind of key pieces of this that I want to highlight and see. How these bills work. This is like this is the first kind of thing to throw out there, see what sticks, see what doesn't. It's going to change 100 times before it ever gets across the finish line. But the framework that he's leading with, I think is pretty compelling. So first, you have elimination of the OPT. This is another type of visa program. The act proposes to end the OPT program, which currently allows international students to work in the U.S. for up to 12 months after graduation, with a possible extension for STEM graduates. This change is aimed at prioritizing American graduates. I think the efficacy of that depends on what other visa program is available. That if you have an extraordinary graduate, I think we're agreed on this. If you have an extraordinary person that comes and studies here, graduates from an American university, there has to be some path to recognize this is a contributor, So does that OPT program do that? I think it's probably far too broad, particularly given that with so many universities, kind of admission standards have gone down, So it's not, I don't think, fair to say that every single person should stay. So the kind of starting point here is, let's try to sunset a lot of these other visa programs, starting with this one, and see if we can have a new kind of path that everyone's on. Number two, I think this is the most interesting, and it's the increased wage requirement for H-1B visas. And so this bill will seek to raise that minimum for H-1Bs from 60,000 to 150,000. This would address a lot of my fundamental concern, which is this indentured servitude is the way I'm going to characterize it. You bring people from a country where salary expectations are far lower, and it's almost like a labor arbitrage for large corporate entities that know they're going to be able to pay less and have somebody that cannot move to another job. So that's a key part of the proposition here. And frankly, for a lot of these high value, supposedly tech jobs, 150,000 is not like it's really even that high. It's like setting a boundary there. And then also something that I had alluded to is replacing the H-1B lottery system. So it would be replaced with a wage-based selection process favoring higher paying job offers. So again, I think the orientation of it is to keep that core, I think, American promise, which is the best and the brightest can come here and work and succeed. But that's not being reflected, at least in the current iteration of the H-1B. Hard for me to see how that's actually being implemented when you have this lottery and kind of lower wages. I did find a list of average salaries for different entities, and one estimate for Tata, which is a big consultancy, it's kind of an Indian-based consultancy that does a lot of H-1B labor, was that the average salary was around 105,000. So what the point I'm making there is, you have kind of tech-focused entities that are almost singularly building a value proposition around this arbitrage of the value of labor that is being facilitated by that H-1B. I haven't seen how many co-authors Senator Banks has had on this yet. I'm sure it's early in the week, and a lot of offices are kind of digesting this. So hard to know, does this really pick up steam? Is it more of a stunt? We don't know yet. But these core tenets, for me at least, are hard for me to argue against, given where we are with almost 1.3 million people in the country today under this H-1B.
Yeah, and Senator Banks is not one, most people don't know his name. It's primarily because he's not a flamethrower. So he's probably a pretty even-keeled member of the Senate.
Yeah.
So I would agree with the prospect of ending the H-1B lottery. I think that needs to be more market-oriented around wages, and there's a more market-oriented solution than just a lottery. I think lotteries are a bad tool to solve
the opposite of meritocracy.
Yeah, it's almost a bad tool to solve almost any problem. Where I vehemently disagree is the OPT program. One of the United States' biggest exports right now is higher education. Mm-hmm. We get an incredible amount of money, and I'll get ChatGPT to tell me in a minute how much. But annually, JBA, maybe you could throw that into ChatGPT. How much money annually is spent by foreign students in the United States? That is a huge export for us. And I know for a fact, as a former professor, which I'm thankfully no longer, because I think higher education is kind of a crumbling industry, although I have tremendous respect for the institution that I was at in particular. And the small, nimble institutions will, hopefully many of them will pivot.
Yeah.
But as an industry, OPT is critical to getting those international students to come to the United States. If we end OPT, they will not come, because the whole reason they come to the United States for education is to try to get a job here afterwards.
Right.
So we would lose incredible revenue. Not only these higher education institutions, but just the country in general.
Yeah.
From a spending perspective, tax, income, or not income tax, excuse me, sales tax, just the economic benefit of having wealthy individuals and kids of wealthy individuals from all over the world come and study the United States.
Yeah. So about 44 billion a year.
44 billion a year.
Yeah.
And I would venture to say that gets cut more than in half if OPT goes away.
Right. And this is probably where you get into the weeds of what goes into the legislation. I can say from my own experience in both undergrad and grad school, it was enriched by the international diversity of the student body. So that's my personal experience. So I can certainly support having a clear value proposition. I think you laid it out well. Why would they come here? Sure, you can say, well, this is the best place to study. Okay, but really, are
But
you
you
going
can
to?
go online and just train yourself better than a college
You're right.
professor
With
can train
AI,
you.
that's being undermined
100%.
significantly.
Yeah.
So the value proposition kind of quickly goes to zero if there's not at least some viable, hey, if you come here, work hard, get a degree, show you're, a go-getter, there's a path for you to contribute to the society and continue to grow as a part of that. I'm on board with that. I can also see, or I guess my spicy take, if I can put it that way, is the lost revenue in many cases in higher education will be a good thing. An acceleration of, I think, a kind of separating out a lot
The
of
wheat from the chaff, because higher education is incredibly subsidized
we
as well.
can't just have kind of degree mills that are hiding behind this visa program. And I'm not saying every university is that, but the $44 billion creates financial incentives where things can get off track. I'm hoping Senator Banks can be an effective mediator of different views and bring us to something that retains what I hope is a broadly held conviction, which is we all nearly any American doesn't have to like go way back in their family tree. They have a near part of their family that has come from somewhere to contribute to this country, and that's been a great part of the story of America. So I'm for that, but I cannot bring myself to endorse really any part of this current H-1B. This is just this looks to me like a monstrosity that was created in 1990 by lobbyists in dark rooms, and it's mushroomed to a point where we're going to have to reckon with this in a way that actually makes sense for the people that are already here. I'm going to close with a stat here, at least on the H-1B debate, from the Bank of America Institute, a report that they did. And I think this is what it boils down to at the end of the day. And that is that the unemployment rate for recent grads now outpaces all workers in America. And so, in other words, you're seeing in the statistics, according to this Bank of America report, that the job market is not only worsening, which we've talked about jobs reports in prior episodes, but particularly most acutely for those grads that are freshly out of school, JBA's peers. And I hear that anecdotally, even in my own circles, that it's tough out there for younger people. Part of that's the age of AI, where maybe a lot of entry level jobs are being in. So you never have a one-to-one correlation here, but that this is going to continue to rise up the ranks of kind of political issues, not just in Washington, but in boardrooms and at companies of, hey, the days where you're just going to fill out paperwork to request another 1,000 H-1Bs, which is publicly searchable information. I think those days are coming to an end, and people are going to really start to think like, what is my license to operate ramifications if a core part of your corporation is being caught up in this debate and not wanting to talk about how do we reform this. So I commend Reed Hastings at least for sticking his neck out there, even though it was a little quick and he didn't even kind of wait for the details to be rolled out. But hey, that's life. But I'm hopeful that more CEOs will follow that and say, I have an opinion on this. Let's talk about it. Because it's not just kind of for political grandstanding. It's an important part of keeping this country on track economically. So good debate, something to continue in the future for sure. Something I wanted to highlight, caught my eye kind of on the timeline, was a post from Michael Gibson, who's one of the guys who had worked with Peter Thiel on the Thiel Fellowship. So Peter Thiel of kind of serial entrepreneur fame, part of the PayPal mafia, and went to Stanford, and then was one of the earliest and most outspoken voices opposed to the current higher education ecosystem, coming from the highest levels himself. And this came out, Michael Gibson says here, not many know Charlie Kirk was an applicant to the Thiel Fellowship way back in 2014. We passed on him because we didn't think a media company had the scalability of a tech startup. Our mistake. But Charlie kept coming to our events for a long time. This caught my eye. It's kind of two sides. It's the story that I think a lot of people are reflecting on right now of Charlie Kirk's legacy, which is in part the story of so many entrepreneurs, which is overcoming rejection and persevering. Can you imagine in 2014, this is before Trump's ever elected a president, trying to pitch like an alt media platform that goes direct to consumer on social media that was like so nascent in 2014, so contrarian that in fact you go to like the most contrarian accelerator, and they're thinking that doesn't fit for us. So that's remarkable. I had to look into it. The acceptance rate for the teal program is about 0.1%. So Charlie can't feel
Too bad.
too bad, and credit to them because it has been really the highest performing VC entity over the years. There's been chatter recently, Y Combinator's always, it's probably been the most famous kind of incubator for Silicon Valley startups by sheer numbers of startups. But by conversion of those startups to unicorns, the Teal Fellowship has actually been number one. And this goes to what we were just discussing, kind of that higher education. Their whole brand is sort of disrupt the typical, if you don't go to Stanford or Harvard, you can't have a Silicon Valley startup. And so they've kind of circumvented that. One of their most famous successful entrepreneurs, Vitalik Buterin, who started Ethereum. So they were, part of that ecosystem way before it was, viewed as anything mainstream in any way, shape, or form.
Wow.
So interesting revelation about Charlie Kirk and his entrepreneurial journey and having overcome that. I thought it was worth sharing.
That's fascinating.
Yep.
Yeah. And a 0.1% acceptance rate. Here in Texas, we've got a great incubator, Capital Factory.
Yeah.
Writes more checks, maybe not the biggest checks, but a higher number of checks than any venture capital entity in the state. And so they're kind of, maybe not as well known as Y Combinator, but making waves in Texas yet. I know we've got an exciting guest coming up, Matt Cole, the CEO of Strive, to talk about the merger with Similar Scientific. That is hot off the press. We're really happy to have him on the show. I'm sure his door is getting beat down for interviews today. He's not quite in the hopper yet, though. We've got one or two other things to get to before we talk Strive. You want to go to the Avalanche Treasury story?
Yeah, so kind of same, adjacent to the Bitcoin Treasury ecosystem has been the emergence of Treasury strategies around other digital assets. The most headline-grabbing one, at least this week, has been Anthony Scaramucci, the Mooch, as he has sometimes taken on the moniker, somewhat infamous, I think, for being the shortest ever appointee in the first Trump administration. He was there for like 3 days, and you remember this whole meltdown. But since then, he's really leaned into the digital asset ecosystem and weathered kind of some dark years there.
Yeah.
So credit to the Mooch, for that. Now shaking it up. So this deal is a partnership. So you got Anthony Scaramucci. You've got Hive Mind, which has been kind of a digital asset focused entity for some time. And the strategy here has been essentially buying out AgriForce, which is a public company. So this is kind of a way to get this entity public. AgriForce is primarily, as the name kind of indicates, been focused on a sustainable agriculture play, incorporating Bitcoin mining as a way. You've got like the waste heat recovery and the energy monetization strategy, and then having an agricultural angle to that. I'm not sure how much that's converted to like real revenue and overall, business success. So I think this is part of a pivot here that made sense for both sides and maybe stays true to the vision that AgriForce had to be in the digital assets industry. So what they are doing is rebranding this to AVAX One. This is the first treasury company that's focused on Avalanche, the layer one blockchain Avalanche. And the way that Scaramucci has kind of pitched this in public disclosures is they view two things. First, that the tokenization of real world assets is kind of the core, play moving forward in digital assets. He's certainly not the first to say that. I mean, that's a widely held, viewpoint. Second, that Avalanche as a blockchain is kind of underappreciated. If you think about Galaxy, they've gone kind of all in on Solana, as public companies go, right? And so I think this is saying Avalanche, hasn't had as much of its time in the sun yet, but has been around long enough where it's proved itself up. At least that's the way I think that they are characterizing it. I'm frankly scratching my head on this one. I think it's compelling to me. The real world assets tokenization is undeniable. That, like, the growth prospect there is almost hard to quantify. So I'm on board with that vision. You want to try to carve out a piece of that pie. Okay, I'm with you. What I can't understand is Avalanche, the token, as a treasury asset, as opposed to Bitcoin, which is kind of this perfect scarcity store of value, purpose made for long-term treasury holding. That to me makes sense. I don't know all the particulars of Avalanche as an asset in terms of who are the holders, what's the issuance schedule, but once you move away from Bitcoin in order to achieve some of the added functionality you see in other chains, part of that trade-off is you have a different ownership structure and a different decentralization proposition. I've never heard Avalanche pitched as like a store of value. I think it's been more oriented towards this sort of programmability. So I'm a little confused. It's a big number, $550 million raise, and owns to aim over 700 million in Avalanche, and the stock significantly up after this announcement. So at least short term, the market seems to be validating it. What are your thoughts on this on Avalanche as a treasury asset?
Yeah, I think it's curious. Nothing against Avalanche or the community that's building on Avalanche, but I don't think that vertical, which is sort of the programmable blockchain, smart contract ecosystem. I mean, I do agree that someone is going to try a digital asset treasury company for every top 25 assets.
Well, this is kind of my question. Now, so you had Solana. Now we're going to Avalanche. Where does it? I mean, is there a Doge treasury company?
Hopefully not. But I think every every serious project in the top 25 that's not a meme coin like Doge, will probably have one of these DATs, as they're calling them, digital asset treasury companies. I don't understand why. I'm sure there was reasons. Scaramucci is not he's a deal maker. So there was probably some confluence of factors that got him to go in this direction. And I think they have a chance to be moderately successful. I don't think there's going to be as much long-term value for multiple digital asset treasury companies for some of these larger, smaller cap assets. You can't really borrow against Avalanche. You know what I mean?
That'd be an interesting stat, as kind of what is the fungibility?
Yeah.
Bitcoin is becoming kind of increasingly pristine collateral that is very fungible. In the capital markets.
And I think the treasury companies need a new mandate. It can't just be we're going to buy and hold some digital asset. You're not accruing. There's not any like value creation there, really. Right. You're just financial engineering, and that arbitrage is going to get closed. Pretty much already has been closed, in my opinion. You're seeing some that NAV is collapsing to 1, sometimes under 1. You're seeing some I'm not going to name names, but you're seeing some digital asset treasury companies stock price collapse as well. And the NAV will go back up in some cases. But I think what we'll see predominantly is two things. One is mergers and acquisitions to consolidate some of these digital asset treasury companies, just like we're going to talk about here in a few minutes with our friend Matt Cole at Strive. So we're going to see that. And then we're also going to see creative operating businesses that supplement the Bitcoin strategy or the Avalanche strategy in this condition. So, it is a way to kind of think differently, in my opinion, about private equity. Private equity is the old new, or the new old. I don't know. It's you get what I'm saying. It was kind of the thing in the 90s and 2000s.
It's like this becomes kind of a holding company for subsidiary ventures within this tokenization ecosystem. The same that a private equity would have had a portfolio of different, if we're an oil and gas focused private equity, we go and get 10 different teams to go and see who can drill the best well, right?
And I think the realization is, and credit to the White House for making waves about asking the SEC to limit reporting to biannually instead of quarterly.
Yeah.
That the compliance cost for going public has to go down. The public markets, the number of public companies is decreasing almost every year for the last 20 years. That's not an encouraging trend. I think right now we're at 3,000. JBA, check us on this, but I think we've got about 3,000 public companies in the United States.
And it's down almost 50% since the kind of tech boom in the 90s peak. Yeah.
So we're down 50% in public companies, but we're up hundreds of percentile. I mean, 3, 4, 5x in privately funded companies.
Huge expansion there. The BlackRocks of the world. The BlackRocks,
the Blackstones, and then private credit.
Yeah.
Private credit is increasingly or been an attractor. I think that's somewhat played out at this point, given where the interest rate environment is. But
it's interesting taking that line of thinking here, because you have this kind of splashy headline here, AVAX 1 Avalanche Treasury, but a lot of the underlying value proposition of tokenizing is a response to the inability to access capital markets from all of these different asset classes that are beholden to basically a couple of private equities to get exit liquidity.
And the LPs just feel like they have handcuffs on.
So you've got maybe a lot of LP capital that would like to invest in you name it vertical, but they're trying to say, well, what's the exit here if I can't IPO? I have to sell to one of these 2 or 3 firms that are the only buyers in this vertical. Doesn't make sense. So you've got the sort of combination of the old with going public on I think this is on NASDAQ that they're going to list by buying Agroforce. But at the same time, your actual value proposition, it's like you're providing exposure to the legacy investing class that invests through these large public stock exchanges to this new wave of tokenization. What an interesting dynamic.
You make a great point. I think you ultimately, I view private equity as kind of a game of musical chairs where ultimately there's no one else to sell it to unless you go public. And sometimes that doesn't really make sense in the verticals that people build up. Like you're not going to take a plumbing company public. I mean, I don't think, maybe somebody proves me wrong, but and to your point, there's about 4,000 publicly traded companies. Obviously down from when we used to have 7,500 back in '96. So
wow,
that's a remarkable in such a short time. When you add in the reality that so many of the new companies and IPOs are in tech that, in the 90s, we had a tech boom there, but then there's been so many new companies from there, but the total amount continues to go down.
Yeah.
So it's not that there hasn't been innovation. We all know so many of the companies that are common parts of our daily life now were founded after this threshold when we started to implode. And that's what we're talking about here is they've all stayed private longer. Look at OpenAI.
Compliance costs.
It's a remarkable story. So look, I'm continuing with the scratching my head, a little bit skeptical, to be honest, about AVAX 1, this new entity, but I'm also hoping that it's a way, and maybe an Anthony Scaramucci with his platform, which is not a small one, can advance that kind of agenda of how do we talk about unleashing American capitalism and using all the tools available to us, which include blockchains, which include new stock exchanges, which include regulatory reform, and whatever else needs to go on that menu. I fear that it may get lost in kind of number go up excitement and posturing. And you're seeing some of that in the volatility after this announcement, in addition to the questions of, this was an agricultural company. How does that remain a part of this overall? So it's fair to say, give them some time. I'm not saying you have to have all these answers the first day you announce the deal, but there's more to be talked about here if this is going to be a long-term value proposition. I think that's what I'm trying to get at, and that would be my encouragement to the mooch, is you've got an opportunity here to articulate this, I think, a little bit better. What's the point of that treasury? How does that convert to kind of value in the real world for Main Street? And I'm sure he's thinking about those things.
Yeah, we'll see.
So I wanted to, before we have CEO of Strive, Matt Cole, come on, we've talked about Avalanche here. Let's do a little bit of a kind of reassessment of the trajectory of the Bitcoin treasury concept, which was first and foremost as far as digital assets go. A little bit like how we got here, because so much has happened, and we've had something of a front row seat to a lot of that. And I'm going to actually start it by teeing up our guest Matt with one of his posts yesterday, because there's an interesting concept in there that I want us to expand on a little bit. He says, with today's announcement of our decision to enter an agreement to acquire Semler Scientific, it's worth digging in a bit on how we make strategic decisions like this. I believe it all comes down to creating the proper incentive alignment, building a great team, and letting them cook. This is what I believe is the best way to incentivize long-run outperformance for a Bitcoin treasury company, and it's how we do it at Strive. Short term, within 1 year, he says that's increased Bitcoin per share, so that's kind of the metric that a treasury is being measured by, Bitcoin per share, and pay all debt liabilities. So you remove kind of these the risk in a cyclical industry of having debt outlying that could wreck you. Longer term, outperform Bitcoin because Bitcoin is the hurdle rate and outperform other publicly traded companies. So the term I wanted to fix in here as we talk about this is Bitcoin is the hurdle rate. I think that is a kind of central to the whole concept of why is this kind of treasury movement continuing to catch steam. It's a broad desire from institutional investors to have exposure to Bitcoin and other digital assets, sure. But it's also part of this evolution of not thinking of the world in terms of the risk-free rate of a treasury bond, but actually this new hurdle rate of, perfect scarcity of a decentralized protocol, and that's what Bitcoin provides. That to me goes back to the kind of central thesis of the first Bitcoin treasury, which was Strategy, Michael Saylor, formerly MicroStrategy, who kind of first fixated on that you have a business that operates in US dollars and generates some cash flow. But over time, your business can be undermined, which is what he experienced, if you have liquidity on your balance sheet that's being debased at some continuous rate of inflation. That was kind of that foundation thesis of why does this make sense? I think that's what I'm trying to get to. A lot of people outside of kind of a Bitcoin native mindset, which we can get locked into just by the friends that we have, they struggle with why are you doing this? If you're not a Bitcoin miner, that makes sense. You have a Bitcoin treasury. They were the first
treasury company.
First, and by design. Okay, but why this new concept? And this is sort of my best reflection on that. I think Matt said it well, is we're moving to Bitcoin is the hurdle rate. It's hard to imagine that, but not long ago it would have seemed farcical. Now it's more and more actually being put into place. How have you kind of seen that? You've been through it over the years of Bitcoin as an asset being laughed at to now being kind of the hottest thing on Wall Street right now. Shed some light on kind of living through that.
Yeah, I think Bitcoin as the hurdle rate used to be kind of a meme that even the people saying it didn't actually believe was true.
From meme to investment strategy.
for some period of time. And now I think it is credible to say that. But in the years past, it wasn't. Not because it wasn't credible theoretically, but wasn't credible because there weren't enough people. There wasn't like an institutional normative agreement that was actually a plausible, investment strategy.
Yeah.
Now it's not a widespread view, but there are enough people in finance and with capital and family offices and different folks, Bitcoin holders included, that see that as true, that it is almost a self-fulfilling prophecy.
Yeah.
So
interesting.
I think at this point, it's going to be really hard for anybody to beat Bitcoin from an annual growth rate perspective.
Yep.
Because the price discovery is still happening. I mean, some years you're going to crush Bitcoin on the down years, but other years you'll have no chance.
Yeah.
Now that's mostly looking backwards. Looking forwards, as that price discovery evens out, and those gains and those bear markets, those troughs kind of raise up and soften out a little bit. I think that price discovery lends itself to a more a less volatile asset that is achievable, from a growth perspective for someone to say, hey, why not buy Bitcoin, invest in me? If someone says, hey, Bitcoin's a hurdle rate, and Bitcoin's been going up by 50% a year,
Yeah.
that's an extremely high hurdle rate.
Yeah.
But when Bitcoin's going up by 10% a year and it's an extremely hard asset and the drawdowns are 5% rather than, 30%, that's an achievable hurdle rate. And that's like an achievable growth rate where folks are like, yes, I can, outperform Bitcoin through work and innovation and creativity and efficiency.
You're layering on top of it. You've got a base Bitcoin exposure.
Yeah.
And then you've got a business on top of it. And that is the kind of the combination that
And the only reason we can justify allocating to the businesses is if they can beat that hurdle rate.
and they're offsetting that by in fact holding the underlying asset. So I like the way you've characterized it.
But perhaps not as much as they otherwise could have.
Yeah.
Right. If they had just gone all in, hold it all, put it in a treasurer, and you're safe, and you're
That's it. You're kind of one and done. You make this one investment. You're locked in at whatever price you bought that at, as opposed to investing in an entity that compounds value over time by continuously building up that treasury. So if you take the longer term your outlook, the more attractive the Bitcoin treasury company becomes as compared to even just buying Bitcoin directly, which I'll never tell people buy no Bitcoin because I'm a believer in and holding the asset yourself and holding your keys. But even I have evolved over time to say there is something here as we discuss kind of societally, how do you want to have a long-term outlook? Well, have a Bitcoin hurdle rate outlook of building value with that as a foundation over time. I like it. And we're talking here about the public markets in private companies, but take a minute to also recognize the evolution we've seen in public entities. There's been a lot of discussion at the federal level, obviously, with the administration talking about a strategic Bitcoin reserve. There's all kinds of speculation of what that may entail in the coming days and weeks. But obviously, we've had the front row seat here in Texas. When we first started to encounter government entities, often it was cities and municipalities and counties, you'll recall, that just expressed an interest to potentially allocate something to Bitcoin. That was impossible then because they had this approved list of things to invest in. And it was kind of the first dipping of the toe into the water of, well, what does it take to make this kind of not verboten? I mean, why is that the case? That over a process of years turned into not only is this going to be allowed, but the state of Texas itself is going to have a strategic Bitcoin reserve and lead because it's not only the long-term thinking that I think we want to encourage more broadly in governments around the world, but it's also that clear indication that there is a future in this Bitcoin treasury strategy in different implementations. And the Bitcoin reserve reflects that at the government level and encourages that kind of innovation. You've had more one-on-one conversations with lawmakers than me, but that's my kind of high level of the incredible evolution we've seen here in Texas. And I think we're coming up on, you're launching the process, in fact, to actually implement that Bitcoin reserve, right?
Yeah, and there is an RFI out from the Texas Treasury Safekeeping and Trust Company to potential vendors to help with custody and insurance and the liquidity provider, et cetera, for the state to hold Bitcoin on the balance sheet, which Texas will be the first state to do in all likelihood. The only other state that could do it is New Hampshire. They have a Bitcoin, past Bitcoin legislation related to a strategic reserve. They have not funded it yet. Now ours is funded, but the money is not allocated into Bitcoin because we still have to run the traps on how we're going to custody this, and that takes a lot of time.
Yeah.
Especially for a state government that is, not comfortable or yet comfortable with this new asset class.
Yeah, it probably doesn't default to an innovative mindset.
Yeah.
But that's a part that the elected leaders wanted to embrace. This is we should have an innovative mindset where warranted. And this is an area where hopefully that comes to pass.
Yeah, and it's part of a broader strategy. I mean, that's the investment is 0.0004% of the Texas biennial budget
Three
it's
zeros in there?
3 zeros in there.
Yeah.
So it's extremely small relative to what, it's a modest foot in the water. It's $10 million.
It's more about the innovation
It's
than
more
the
about the
actual
innovation. It's more about
exposure.
the almost the signal
Yeah.
that it sends to the industry. So I know we've got Matt Cole coming on here soon. Okay, we got to get going on Tesla stock here. Go for it, Steve, on Tesla stock.
Okay. Well, we have some time that we wanted to revisit the discussion we'd had last week around a really interesting product that was rolled out from Perplexity AI that is within their kind of finance dashboard that they've been building that gives different recommendations and assessments of stock prices. So we talked about Oracle and Apple, and we didn't have time to get to Tesla. And we wanted to take time because it's really a remarkable report and I think draws out a lot of the discussion more broadly in this kind of hyper AI powered landscape that we're in of like what makes a company make sense as an investment or not. So I'm going to read part of the core investment thesis before I just get to like their recommendation on Tesla. I just want to read part of this because it really is a kind of remarkable take on it. It says Tesla represents one of the most significantly overvalued securities in the market today, trading at extreme multiples that demand flawless execution of speculative AI and robotics initiatives, while its core automotive business deteriorates. With the company's U.S. EV market share declining from 62% to 43% and revenue contracting 2.7% on a trailing 12-month basis, Tesla faces a critical inflection point where execution risks far outweigh the probability of achieving the transformational growth necessary to justify current valuations. The market has priced Tesla as a technology platform company rather than an automotive manufacturer. And this report, interestingly, came out right before Elon Musk came out and said, I'm going to buy another $1 billion worth of Tesla stock. And so since then, you've had the stock continue to trade up. It's basically flat today, all the way up to over $433 a share. So this report laid out a thesis of different valuation approaches and came up with a 12-month price target of under $29. So you're talking more than 90% drawdown from where Tesla is trading today. And the most interesting part of this to me is this debate around, they're saying it is being traded as a technology platform company and it is a automotive manufacturer. They lay out a cash flow analysis built on a long-term kind of terminal value growth rate on cash flow of 2.5%, which is about what you would expect if you're just a car manufacturer and you're just kind of churning out your different models and building that. So to me, the report is interesting, but I have to take the other side and say, well, Tesla is a technology platform.
Yeah.
That is actually exactly what the company is. How can you justify the valuation? Well, nobody knows. That's the mystique of Elon Musk. Interestingly, absent from the report was an attempt, which I think would be almost impossible, to come up with some valuation framework for. There's two enormous upsides in Tesla. The first is autonomous vehicles, so robotaxis are actually out on the street now. There's issues there too, but a lot of the reviews coming back are of remarkable advancement there, and even if it's not ready for prime time today, it's trending in the right direction. No one has as much data as Tesla to do that. So you've got the autonomous vehicle side. Just on that, you could come up with trillions of dollars of potential addressable market. The other side is the Optimus robot. And so essentially, they're saying that the company would pivot to become more a robotics company than an automotive company if Optimus can be successful. So what is the stock price reflecting? It's kind of this collective societal bet on can Elon Musk do either of those two things? Solve the robo-taxi or solve Optimus? If you get both, then it's the fair value of Tesla is 100x what it is today. It's can he get either of those two, incredible initiatives that this company's operating as kind of a holding company for? So what's my point? They offer this kind of cash flow analysis that is the basis of any kind of business 101, existence. But at the end of the day, while that is viable in terms of valuation for, 99% of companies, in this world that we're living in, like Tesla's not about the cash flows. It's this sort of, what do you think can happen? And we've seen that with Elon's investing more in it, and then now negotiating an even kind of more astronomical potential incentive package that would compound his placement as the richest man in the world. At the end of the day, what's my point is it is a technology platform. It's not a car company. That's just kind of what they're using to monetize some of that technology here and now today. I'm rooting for Elon. I'm rooting for Tesla. It's hard to be against them. I don't own a Tesla myself, but it's just incredible to watch a company really just try to do the impossible and bring it into reality. So
I think
not sure your outlook.
Yeah, let's have Tesla sponsor the show. I think you'll have you'll be driving a Tesla before we know it. I know we do have Matt Cole, the CEO of Strive, in the waiting room.
How's it going?
Hey, Matt, how's it going?
Good, although I would rather be in Texas than New York right now. I'm got some FOMO. I'm guessing you guys are there.
Amen to that. We are live from Dallas, Texas.
Live from Dallas, Texas, and you're not missing anything. It is like 95 degrees today. The cold front is coming tomorrow, though, so when you get back in town, it'll be nice and low 80s.
We'll go for a round of golf.
Yeah, but you don't have time for golf right now. You're probably one of the most sought after interviews in Bitcoin right now with this similar scientific acquisition, all stock deal. Let's see, I've got the numbers here for, and you correct us if we're wrong, but you guys acquired a similar scientific for an all stock deal, announced it just recently, and at $90 a share, representing about a 200% premium. How long has this been in the works? You guys are, again, the talk of the town. You must have been working on this for months now.
Couple days. I'll walk through that, but just so the announced price for Semler was a 210% premium. I think their stock's trading around 29 something and change, so it's a little bit higher, but math, generally speaking, is right. But to get in just a quick framework on that is we're a Bitcoin treasury company. We actually don't think about the world in fiat currency terms. We think about the world in pricing Bitcoin. And so for us, our mandate is to increase the amount of Bitcoin that each share, so each common equity share holds. And so forget the fiat price framework. This deal immediately increased in a very attractive manner the amount of Bitcoin that each share would own if the merger closes. And so that is our mandate. And that is how you start, when you start thinking about yourself on the Bitcoin standard, which I know you, Lee, are also passionate about, Bitcoin and thinking about the world in that framework. The old framework of fiat currency becomes, those models just don't work. It's a framework that's broken. And so I think it's really important when understanding why we make strategic decisions on the Bitcoin standard and how we also think that will translate over the long run into potentially outperforming even Bitcoin itself. Because if you're thinking in fiat mindset, you might have great fiat returns, but you're likely to underperform Bitcoin because Bitcoin, as we know, has been an asset that goes up and compounds at a very high rate of return. And so you have to think about your life and your company in that sort of a mindset. Bitcoin is the hurdle rate for any sort of capital decision. And so for us, we looked at Semler and said, and first off, what an innovative company. They were the second U.S. publicly traded company to adopt a Bitcoin standard behind Eric Semler's leadership. So, what a fantastic guy. It's the primary reason, actually, his brain, why we wanted him on our board post-transaction. The guy is an innovative thinker. He's not constrained by the bureaucracy of normal thinking, and just like us. But their company was trading below their Bitcoin value. Just if you only look at it on a Bitcoin metric, it's like they're trading below Bitcoin, right? That makes no sense.
Makes no sense.
And then their operating business, although it's had some challenges, it's been historically profitable. They have a historically profitable operating business, and then Bitcoin at a discount, just as kind of their as-is state. And we saw the opportunity to take those assets that were clearly struggling to meld together, use our largest shareholder, Vivek Ramaswamy's network and mind, and some people on our board that have experience in the healthcare and medical industry, like Obit Roy, and our CFO that comes from biotech space, Ben Pham, and give that operating business. Just to touch on that real quickly, it's a business around preventative healthcare. It's really basically a MAHA business that instead of waiting until you get sick, you go to the doctor, you actually figure out things on the front end, which we're all passionate about. But we think that mandate could actually be expanded given the political movements in this country, expanded mandate around preventative healthcare, preventative medical diagnostics, new management team, and then we're probably going to look to monetize it, spin it out, something along those natures. That maybe it doesn't necessarily have to be a spin out, but get rid of it in a way that it creates additional Bitcoin for the combined company shareholder, right? Both Semler's shareholders and ours. But then that company can operate more from a fiat mindset in a way that we think could drive attractive fiat returns, but for us, drive additional Bitcoin accretion.
It's amazing. And when would you foresee, by the way, we did dissect your Bitcoin is the hurdle rate tweet earlier. Was that yesterday?
I think it was yesterday's post. Yeah,
yesterday's
it was a good
post. So we probably spent 20 minutes talking about Bitcoin as the hurdle rate a few minutes ago. And you're not the only one to have said that, but I feel like you kind of popularized that phrase. So let me ask, you may not be able to say, but do you know when the anticipated vote will be on the Semler stockholder side, and when potential the merger could close? Is that in the horizon?
We don't have anything we can announce yet, but I can tell you a framework for how to think about it, which, frameworks can change, but, if you look at Strive, we just went public actually 8 days ago, last Monday, which is pretty wild. I actually think we might be the quickest company in U.S. capital markets history to go public and then announce another acquisition of a publicly traded company. And that's the Texas energy for you. But I think when it comes to timelines, Strive just completed its own reverse merger of company asset entities, right, which is our ticker ASST. And we announced that in May and we closed it in September. So it was, a few month process. And there's certain things that are, regulatory. So SEC reviews in timeframes that take time, and there's nothing that we can do. And I will say that we had an amazing experience working with the SEC through this transaction. And as an asset manager under the previous administration, it was a completely different mindset, not a growth mindset, not a capitalism mindset. So I have no complaints, but they have things that they have to do, right? And then there's things on our side that tend to come, and on Semler's side, working together, that tend to come down to hard work. And that will not be a barrier to get this closed. We will work at lightning speed. And just to touch on timelines of how this deal came about, you're like, you must have been working on this for months. We started working on this last Wednesday.
That's wild.
And so the time frame, the speed, the execution, the dedication, the understanding of removing bureaucracy and thinking in driving shareholder value, these teams move fast. So at as fast of a possible pace, we'll look to get this to a shareholder vote for the Semler side and try to get this closed.
Wow.
That really is a remarkable achievement, Matt. And I commend you on that. I wanted to give you a chance to share a little bit around just the growth and evolution of Strive. We spent about 20 minutes talking about Bitcoin as the hurdle rate in this transaction before you came on, which is really, again, just an incredible timeline to execute that. But I wanted to give you a moment to talk about that process of building this company focused on what used to be not controversial, shareholder value instead of other extemporaneous and irrelevant things, and how that also led you to coming to Texas, because the company didn't start out that way. And I think it's an awesome story that we're really working to encourage more companies. We're cheering y'all on. We're big fans because it's the perfect encapsulation, I think, of why we wanted to create this show and highlight Texas as a place where innovation can thrive. We can think differently. We can embrace a mindset that says Bitcoin is the hurdle rate. I love to see it. Can you give us a little bit of like your personal journey and how Strive ended up where it is today?
Yeah, so my personal journey from a business perspective is traditional fixed income markets and a strict commitment to fiduciary duty. And so that fiduciary duty falls through if you're running a fund, which is what I used to do when I was, in California at CalPERS, running a $70 billion bond portfolio. But ultimately, I saw there constraints on capitalism and fiduciary duty that I didn't feel comfortable with. And that led me to leaving Strive. My wife and I were actually working on the same business idea as Strive, and got put in contact with Vivek, who was also working on the same idea, and we combined forces, right? But it was a strict mission on fiduciary duty, that the purpose of a for-profit corporation is to maximize value. There's no dual mandates. It's a singular, most important mandate to maximize long-run shareholder value, obviously ethically within the law. But within those constraints, if you think about a sporting analogy, you're playing basketball. Within the rules of basketball, you want to win the game. Within the rules that the government sets forth, and we can debate those rules, and we do debate those rules, but within those rules, maximize shareholder value unapologetically and reject things that were seeping into capital markets, ESG constraints, DEI constraints. And the bottom line, I think, in this country, and I think Texas was a big part of that, and Vivek has been a major part of this, is getting back to normalcy as a country. And as we do that, we can unlock so much value. And you're starting to see the execution of that. When we talk about speed to a merger, why does a merger need to take several months? It only does if there's bureaucracy or negotiations that ultimately probably don't harm shareholder value. In a business mindset, things can move extremely quickly. And that's what we're starting to see from the federal perspective under the new administration. It's what you see in Texas. It's what I'm actually pretty confident you're going to start seeing much more in Ohio if Vivek's the next governor of Ohio, right? But really, as a country, right? Like from a country, America first. I want our states to all do well, and Texas is amazing. But American mindset, unlocking innovation in the most maximal way, and I think that's what Texas has seen as an opportunity relative to like the New Yorks of the world to build a financial hub, and it's pretty exciting times there.
Exciting to have you be a part of it. You articulated that so well. And as Texans, we welcome the competition with Ohio and others. It's good for America, which is good for everybody here. I wanted to ask as well, so post-merger, you'll have about 11,000 Bitcoin, pretty big stack. Kind of puts you in the upper echelon. We've seen a lot of, all different kinds of treasury companies announce, not just Bitcoin now, but you're having a proliferation of kind of digital asset treasury. I think you're staking out a position, having gone through a corporate merger in a former life myself. I can really appreciate how remarkable it is how you're executing and getting that done. So that is, you're one of one in that regard. How do you view kind of the M&A process going forward? Do you think there's further consolidation? Are there 2 or 3 at the end of the day, a couple of years from now, that are the Bitcoin treasury companies? Or is there a kind of a continued proliferation of different flavors? I know that's evolving kind of every day, but you're clearly carving yourself out, I think, putting yourself in a position to be in that sort of leadership tip of the spear for this as an investment class. What does it look like as a sector moving forward with kind of the growing investor sentiment around wanting this kind of company?
Yeah, so my view is that there could be literally like low-level hundreds of pure-play Bitcoin treasury companies from a differentiation perspective. And,
wow.
And you could look at that and you might say, well, that's a lot. I think it's early for that right now, actually, and I'll get through why. But if you look at banks or insurance companies from an operating perspective, like banks typically have pretty similar mandates from a customer perspective. But they also differentiate from how they operate as a company. And I think you'll see that in Bitcoin treasury space with regards to risk. How much leverage do they take? What type of leverage do they take? How do they think about income? And you can get very different risk return profiles. And there's not a right answer. I mean, we have a view of what we think the right answer for us is, which is basically the fastest horse, period. We're super bullish Bitcoin. We think we're in a digital gold rush. And we think matching a perpetually long duration asset in Bitcoin with perpetual preferred equity as our financing model. We think that we're uniquely situated in the US markets, even from a speed to achieve that perspective in an advantageous position versus strategy. We'll never own more Bitcoin than strategy, but from a structure perspective, I think we can build that structure out faster. I think that'll be extremely attractive. But if you look at the landscape right now, you've had a lot of Bitcoin treasury companies that started with no actual view of how they would differentiate themselves. They just saw an opportunity to get out there. And so I think we've, in a world where I think there's a abundant opportunity for differentiation, I don't think we've seen that in a lot of the Bitcoin treasuries companies. And I think the markets have priced that in. And I think that means that there is an environment ripe for consolidation where 1 + 1 can equal 3 through some of that consolidation. And even for us, we're one of the upper echelon players, but when you look at institutional capital, we will lower our cost of capital on the financing side as we grow. Because as an example, one of the largest buyers in Bitcoin treasury space as an institution is Capital Group. Their largest portfolio that wants access to this has a $5 or $6 billion minimum market cap before they can even buy. So Strive's not at that level yet. Yeah. And so when you unlock that level, your cost of capital goes down, you're able to accelerate your mission further. So that's one reason why I think consolidation makes sense. The other is, this lack of differentiation, but here's the hard bit, because you've done M&A activity. I think a lot of the smaller ones would be better off for their shareholders to consolidate strategically. And for the larger players also, there's, I think a 1 + 1 = 3, but there's people involved. And the people have to get to the point where they understand why this is in the best interest of shareholders. And sometimes there's misaligned incentives where they're individually more aligned to hold on to this thing that could make more value if they unlocked it. And that's where, it takes unique people on both sides to be able to do this. And that's what happened with Strive and Semler, is that both sides were like, this is 1 + 1 = 3. Let's do this. Let's do this now. Let's set a precedent for the market to learn from of how you can think about M&A activity priced in Bitcoin.
Wow. Really well said.
Fascinating. And cut us off if you need to jump, but I do have one more question for you.
Sure, we can do one more. Let's do it.
The operating business that Semler had, I think this is not something that I had thought of before.
This is the question.
You're glad it's the question?
Go ahead and finish the question. I'm glad it's the question.
Yeah. So, I did not think about the fact that a lot of your colleagues had a bunch of experience running and investing in healthcare companies.
Yeah, fascinating.
So that made Semler an even more attractive acquisition from a Bitcoin per share perspective, but also from the operating business perspective. What are the plans, if you can say, how are you guys going to drive revenue from that side, from the operating business as well?
Yeah, I can say enough to give people, with imagination to understand what we're trying to do here. And so it's leveraging what I say is the big brains in medical device and biotech within Strive, from our largest shareholder, Vivek, to, board member, Ovik Roy, to our CFO, Ben Pham, and expanding this mandate, because I think this MAHA movement is ripe for expansion in preventative healthcare medical device spaces. And there's, similar to the Bitcoin treasury space, there's a lot of these companies that are trading way below their value. And so bringing together a dream team within that space with an expanded mandate, knowing that the political winds have shifted in a major way towards this and unlocking value, doing that quickly in the topco, but ultimately looking to monetize that. Because for us, although I think it is going to be an extremely interesting opportunity in fiat terms, I don't think it'll meet, and it could change, my view could change, but at this point, I don't think it'll meet the Bitcoin is the hurdle rate, even though it's a profitable business, right? Because that's the mindset that we are thinking from. And so we have to think during this digital gold rush, how do we maximize Bitcoin holdings? But we think we can unlock a ton of value with that operating business and its segment within the market.
We talked about that earlier with Bitcoin being the hurdle rate. Right now, with price discovery where it is, that's a very high hurdle rate. Do you think in 10 years that hurdle rate will be such that we're a little bit closer to a more accurate price discovery? The highs will be more muted. The bear markets will be more muted. Do you think there's a chance where, those things come into more balance?
Yes, absolutely. So I think it's At this point, I would say it's likely a 10 to 15 year period right now where I think we're going to be in a corporate and a sovereign state digital gold rush around Bitcoin accumulation. And I think that's on two dimensions. One, just as Bitcoin is now being accepted much more institutionally, we have a strategic Bitcoin reserve at the federal level. Obviously, strategy has laid out a playbook that's driven a lot of shareholder value. And so there's this digital gold rush, but on the other side, as an operating business, we're also having mass disruption through AI. And I think that's going to displace a lot of companies. So just operating risk within corporations is at a much higher level, which I think will further drive adoption of a Bitcoin standard for companies to drive up their balance sheet strength, while they're often likely going to have corporate weakness through AI disruption. And so as that plays out, 10 to 15 years down the future, and maybe the future returns of Bitcoin are less, but I still do think it's an asset that is a savings asset. And I think in America, we've had a lack of a savings asset where if you buy US Treasuries, even though they have some yield, you lose real purchasing power because of how fastly fiat currencies are being displaced. And so just the return of an asset that is a savings asset will perpetually into the future reshape how corporations are going to have to think about spending money, capital deployment, with Bitcoin being the hurdle rate. But ultimately, that hurdle rate, I do think, will lower relative to corporate activity 10 to 15 years into the future. But at this point, it's so early that I don't think that it's beneficial from a corporate perspective to think about, what happens in 15 years from now in the midst of the early innings of a digital gold rush.
Well said. Ladies and gentlemen, Matt Cole, CEO of Strive, and their acquisition of Semler Scientific, soon to be hopefully consolidated. I guess I can say that. You may not be able to say that, Matt, but we're rooting for you guys and excited. Y'all are a Dallas-based public company. It's almost like everything that's good about Dallas, Texas, American innovation, bringing back public capital markets. It's everything that this show is certainly here to champion. So
you're setting a good example, Matt. Keep up the good work.
Keep up the good work.
Love it, guys. Thanks for having me. We'll chat soon.
Yeah, I don't think there is another company that's like literally moved to Dallas,
0 to 100 miles an hour,
gone public. I mean, their move to Dallas was probably complete 6 months ago.
Yeah, no,
They're
it's a
public
recent
8
thing.
days ago. They're already acquiring a public company.
Yeah, it's incredible to execute under that kind of timeline. And I thought it was interesting also what Matt said about maintaining the focus on that Bitcoin hurdle rate. You have this business, Semler. You could, kind of a diagnostics, healthcare oriented business. But what was interesting to me is you could see a moment where that business isn't tied to kind of the cyclicality potentially in Bitcoin price action. So if you do have a downturn in Bitcoin price, you have a fiat cash flowing business that could also be monetized at that time at a more attractive entry rate for the long-term Bitcoin strategy. It just gives you more optionality. And that's not the last we've heard of this story. Like, you just know it's going to continue to build, and they have a lot of momentum, and just awesome to see them winning in the capital markets and being rewarded for that. So not the last discussion we'll be having about it.
I know, hope not. Excited for Matt and their team. We've got another interview coming up shortly. Do we have time to get to one segment before we jump in with Michael?
Well, so we're going to have Michael Tanguma, CEO of On-Ramp Bitcoin, joining us. So but before we go there, I wanted to talk a little bit about, we've been very public markets focused. We talked a little around these accelerators that are developing, and this is what we're going to have Michael come on to shed some more light on, is historically California has kind of been ground zero for the incubator and accelerator ecosystem that created this almost sense of, if you want to start a successful company, you must be there because you have this ecosystem that builds up around that. And you had mentioned that one of the successful kind of Texas-based incubators and accelerators has been Capital Factory, friend of the show. We're rooting for them, doing great work for sure. But there's more and more discussion around how do you build the innovative ecosystem for what I might call real America that maybe doesn't want to move to Silicon Valley. but you have a desire to build and make new things, particularly against the backdrop of the AI disruption that Matt was just referring to. That creates a lot of issues for companies, but also raises up a lot of opportunities, right? And implementing that kind of Bitcoin standard mindset against that kind of disruption, we've seen that ourselves in kind of the like small startup world. And I think what we're starting to see is it's becoming more mainstream with what's going on in the public markets. And that's how I kind of wanted to tee up the discussion with Michael around continuing to take this, not just for the top institutional investors focused on public markets, but further upstream to the venture capital, seed capital, and kind of more and more companies being born on day one as kind of a Bitcoin hurdle rate mindset. I thought it was just interesting that that's a lot of the area where Michael is working and what OnRamp has been developing within their own treasury solution model for Bitcoin treasury companies. I am hopeful that this also dovetails on part of the big value proposition of Dallas as a capital hub, and this has been repeated a lot as the Texas Stock Exchange prepares to open, is there's a lot of private equity and businesses here already. Mm-hmm. In other words, there's an underserved market of innovators and family offices and private equity that already exist here. And I think that's what we want to encourage and make Dallas like the center hub for serving that market, and recognizing that a part of that future is also having that kind of Bitcoin mindset that is attracting more and more investment to Dallas as a hub. So that's kind of my like framework that I've been thinking through, and how we go through that evolution from thinking of Bitcoin companies and startups is like this totally separate ecosystem to more of like a pipeline that you're starting there and you're building up to the larger public capital markets that we're building, here in Dallas.
Yeah. And companies, have in the past few decades been dissuaded from going public early. I think you'll start to see more of that, especially with exchanges like the Toronto Stock Exchange, like the Texas Stock
They have
Exchange.
always been in Toronto kind of friendlier to the startup ecosystem.
They're friendlier to going public early, and there's a lower burden of compliance costs. There's lower listing fees and all that kind of thing. So, and then Toronto is not shy about saying, hey, once you go public here, you're 5 years down the road, graduate to the New York Stock Exchange. I don't think the Texas Stock Exchange wants to be viewed that way. They want to be viewed as the ending place. But I would like to see all of the three exchanges in Texas, NYSE Texas, NASDAQ, and the Texas Stock Exchange, be more amenable to taking companies that are younger.
Yeah.
I just think that there's that valley of death that's hard to cross. And in this economy, eyeballs almost equal. It's an unfair advantage, right? So if you get, a private equity entity that's just going to wring your company out, you'll have no eyeballs on it. There's no benefit of there's no public attention benefit there.
Yeah. It becomes increasingly less attractive, and you can think about some of the comments we heard from Matt through the lens of this kind of pipeline that I'm talking about. In other words, part of what attracted them to the merger they're going through is the relatively attractive entry point to acquire more Bitcoin. And then as a part of that, there was a viable business as well, which becomes something to monetize. But the Bitcoin treasury strategy for a seemingly unrelated company, a healthcare company, ultimately facilitated them having a successful part of their kind of exit strategy. So what am I saying? You almost have an opportunity where you can build a community of startup, angel, and venture investors that kind of recognize you can have a company that's going after X, Y, or Z part of the economy. They're solving this problem for some group of people. That's the traditional value proposition of any startup company. But by beginning it as a Bitcoin treasury company as well, you tap into the opportunity to exit to this larger group of already publicly listed Bitcoin treasury companies that are bringing in all of this capital that wants exposure to that kind of like bifurcated long-term investment proposition. I think that's really interesting and a place that Dallas could really own, because it requires a disruption of the old model, which is working very well for the comfortable incumbents, right? So I'm hopeful to see that continue to develop, and more examples of transactions like what Strive is doing with Semler, where it's like you have an underlying business, but the ultimate exit was also driven by recognizing the value of the long-term Bitcoin piece of that.
Yeah, agreed.
So we're waiting on Michael to join us to talk more about that. In the meantime, let's go ahead and talk about OpenAI in the headlines again. And this is kind of like the opposite of the Bitcoin treasury. The Bitcoin treasury is about long-term building up value. This latest transaction with NVIDIA is a little bit bizarre to me in that NVIDIA's announced a strategic partnership to invest $100 billion into OpenAI. And to me, there's two things that jump out at me right away. The first, and I think Sam Altman's already kind of referred to this, 100 billion is kind of not moving the needle nowadays, and like major strategic partnerships as they go. The overall amount that OpenAI is already ordering from NVIDIA, like this isn't like a material difference in that. So just the headline number that this was big news, confusing to me. Number two, there's kind of the circular aspect of this, of like NVIDIA is going to invest in OpenAI so that OpenAI can pay Oracle to build infrastructure to pay NVIDIA to, and the $100 billion is increasing the valuation of all three companies in this mix. And how long can that continue on? I want to read just a really funny post from Dylan Patel, who's one of the co-founders of SemiAnalysis, kind of AI focused consultancy. And he's just got this kind of this joke meme that shows OpenAI, Oracle, and NVIDIA, and the $100 billion is going around. He says, yo, I heard if you press up, up, down, down, left, right, BA in San Francisco, there's an infinite money glitch. And it's like, there's this cheat code. You just come up with an announcement, which in this case, I think this investment is to be deployed in the second half of 2026. So you're talking like pretty materially down the road here. And yet the market still kind of cheers it. And obviously OpenAI, not public, but well received for NVIDIA, and they continue their march upwards. I just feel like the music has to stop on this kind of stuff eventually. And it has to pivot to a market that says what is built today and actually being deployed, as opposed to the strategic thing we're going to do, somewhere down the road. It also feels like I'm going to end up being wrong, and we're going to get a bunch more announcements. As long as you can announce a number and your stock just goes up, a lot of incentive to keep doing it, right?
There is, and I do, agree with you on the circular nature of it. You're essentially investing in your customer, which in some situations is not a bad idea. Although I feel like, let's see if the data, Perplexity can give us some data on this. JB, I'm not sure if you've got NVIDIA stock price pulled up, but perhaps there's a little bit of a bubble forming here in the whole AI compute world. Perhaps not. There's always Javon's paradox. As something gets more efficient, the more you use of it. So I'm of two minds on it. Let's put a pin in that though, because we've got Michael Tanguma who's joining us. And JB, I'm sure if you could pull up some of the data from Perplexity around not OpenAI, around NVIDIA, how the market digested their $100 billion investment in OpenAI. But yeah, Michael Tanguma joining us. We've kind of talked to the audience a little bit, Michael, about about early riders, about what you guys are building. Give it to us from your perspective. This is a public market show, but Steve was just articulating the need for private companies to have access to capital earlier, to build this incubation pipeline that perhaps cuts out some of the traditional middlemen and private equity. Tell us a little bit about what you guys are working on from your seat.
Yeah, definitely. So I feel like I got a layup here because I was just chatting on a podcast right before this about the NVIDIA OpenAI kind of loop or feedback loop. And
Yeah.
there was another thing that stemmed from it that was a quote tweet. It was 90% of YC-backed companies referenced that 50% of their revenue comes from other. So 90% of business B2B YC companies get 50% of their revenue from other YC-backed companies.
Wow.
And so this is just natural that we've seen in the markets. I had a background and experience at WeWork. When you look at ZERP and lower interest rates, you naturally have this bubble that forms where they get revenue from other portfolio companies. And ultimately, this ties into early riders. So early riders, Bitcoin denominated investment firm. So we allocate across the spectrum, but really look at a higher cost of capital than the dollar. And the main reason we do that is because our investors are naturally focused or have a return profile that Bitcoin's their hurdle rate. So it's not to say they're not willing to invest. They're ultimately looking to make more Bitcoin. We built our business on-ramp like this, and we realized that's how you can build effectively the most efficient business, because it's not to say you don't spend the money, you just get insanely discerning on how you allocate capital. We look at this as the future of how all capital allocation on a long enough time horizon will occur, because it's the natural prerequisite. If you're going to invest money, if you recognize Bitcoin is the best form of money, best investment, you're just naturally going to have to do the opportunity cost. Do you hold the underlying, or do you invest to, there's execution risk and all of that. And so you need to be recouped for that. So we have that business, that venture fund, and we recognize that a part of it has a level of incubation / studio component. So if you guys are familiar with venture, traditional venture, somebody shows up, pre-seed, seed, series A, and they already have some type of business and they're looking to build. But we realized, and this is really, you go back to Peter Thiel talks about this in 0 to 1, you have to have the foundation of almost any endeavor right, or everything in perpetuity will have a fractal or fracture of that. Meaning if the unit economics, right, and unit economics is a fancy word for, you just have to be able to sell what you have for more than what it costs to produce, which is, again, a little bit crazy in the world we live in today. And we see this if you guys talk about publicly traded companies, the amount of revenue tied to versus valuation is at all-time highs.
Right.
That can't persist for forever. And so part of our model is we incubate companies because we have a natural lens as entrepreneurs and operators on what are the things that need to exist in the market. And we either co-found in a junior position or help at the early stages incubate and get that right foundation. And so that stems into being a native Texan, having land down in Wimberley, about 40 minutes from Austin. We launched the Stables, which is the first Texas accelerator dedicated to Bitcoin denominated returns. It will come equipped with what entrepreneurs and founders would want as far as like wellness, daycare for children, a few houses. It's property that I actually have already and have been living on.
Oh, wow.
But the core idea is that every year, we will pick one applicant to come for this 4-week program to sit on site and get those fundamentals and foundation right, so that they can go out back into the real world wherever they live and start to execute on that. The last thing I'll say is the world is increasingly getting more chaotic and noisier. And so we look at our previous experience, really getting away from the city to be able to focus on the fundamentals. Chris Sacca, world-class, probably known as like one of the greatest of all times in venture capital. He touted all of his success to leaving San Francisco back in the day and going up to Truckee, Lake Tahoe, and ultimately creating that intentionality by, instead of all the copies and all the meetings, if you were serious about what you were trying to do, you would come up there. And that's where it spawned the Uber and Twitter and Travis Kalanick hanging out in his hot tub and all the things that you've heard in Silicon Valley lore. So hopefully that wasn't too long-winded, but that's a little bit about what we're doing and why we're excited and launched last week.
No, I thought it was an excellent framework and really an interesting, just disruptive venture. I think it'd be helpful if you shed a little bit of light on, you built On-Ramp Bitcoin, which is kind of one of the leading solutions for Bitcoin really holding by individuals, but also I think in this case as a corporate treasury strategy. So I'm wondering, as you launch early riders, is this like totally separate from On-Ramp Bitcoin, or is the idea also that business benefits from seeding new businesses that are coming into this broader ecosystem of the Bitcoin treasury, kind of that Bitcoin hurdle rate mindset. How do you view these two entities that you're involved with? And just talk through that a little bit, or maybe there's not a synergy there. I'm just curious what your take is on that.
It's a great question and deep synergy, because my background was in traditional Silicon Valley technology. I was at YC-backed companies, WeWork, Google, and I saw the highest level of operational execution, but they lacked the fundamentals. And then I came into the Bitcoin ecosystem, and they really had the fundamentals and understanding how to build, but it really lacked the operational excellence. And so on-ramp stemmed from that, really realizing what is commercially viable for mass market adoption. So we pioneered this private banking style infrastructure for businesses, individuals, and we work with some of the first pensions in the world to allocate to Bitcoin. During that process, though, I was really scared to ruin the business with too much liquidity, because I saw that ruin all the foundations, the soundness of business building, and everything I had been part of before. So I funded the business myself, but I was very long Bitcoin. And so if I was going to invest Bitcoin, my own personal balance sheet, I had to know that I was going to actually make more Bitcoin in the future, because the rational decision would be just to hold Bitcoin or start a nonprofit.
Sure.
And what we discovered by building that is we got to the most efficient outcome in almost every business decision-making notion, whether it's hiring and how do you think about leveraging flexible talent to start. It's a great heuristic to realize who is really a good culture fit, because naturally, if they don't do that, then it probably isn't the best fit if they're not interested in your business. To something that's near and dear to your heart is really getting close to AI and deflationary technology, because at the end of the day, you're looking at, well, the opportunity cost of a better form of money growing, or so do I hold it or do I spend it? But I need to actually produce in some way more Bitcoin. And so the best example is we produce no shortage of content and material around podcasts. And we first got quoted because we weren't podcasters, producers that charge you $1,000 per episode. And we're producing like 12 plus a month. Like, there's no way we can do that. And for $29.99, there's like beautiful AI software now that will take it, you can record, will splice up all the clips, let you market it. And so you think about that. So as we were building that, it was like, oh my God, like if on a long enough time horizon, every individual is going to come to the realization, well, I can just hold spot Bitcoin and it'll appreciate in value, then they won't give it up unless somebody's going to return more Bitcoin to them. But then the other side of that is we were running circles around competitors in the market, just moving faster than everyone, because we got to a more efficient way to build a business. Then every business will outcompete every other business that adopts this form. And so while we focus, to your direct question, OnRamp operates like the private bank, and Early Riders operates next to it as the investment bank. So our clients, not all of them, but a large percentage, participate in Early Riders because they naturally understand multi-institution, the things, the lens we're building at, they want a part of that into other business endeavors. But I'll say the most exciting thing that we're looking at, we're still a little early, is less Bitcoin infrastructure. Today, we know where the gaps are because we've been building this space for over half a decade. But the thing that I'm most particularly interested in is the rest of the world. When you think about publicly traded companies and all the things you've discussed, there's an inherent amount of fat built into almost every company, including OnRamp. We're not perfect, but the point being is, think about like SaaS-based, software as a service. How many publicly traded companies aren't even really optimally set up to use software as a service, let alone AI? And what ultimately will happen is, and we see this, and this is why the venture fund is called Early Riders, is that the entrepreneur and operator at the company, we've all probably been there, and even people listening, they try with the carrot first to help optimize, try for meritocracy, try to help the business. And if they're long Bitcoin, eventually they don't have golden handcuffs, and then they come back with the stick and they're like, oh my God, I'm just going to run this back 10 times faster with 1/10 the cost.
Yeah.
Because I know where everything's laid. And then I'm also going to have a better form of money because I've taken on some Bitcoin. And so when you're suffering from margin compression and inflation, they're able to actually offset that and get stronger. And that's really our version. Our thesis is the Early Riders will lead the way. It'll be the net new companies that outcompete the others because there's too much inertia that's built into the system in that way.
So we definitely agree that SaaS is absolutely ripe for disruption, and there's a lot of fat to cut through there. I'm wondering, as you launch this program, so Wimberley's like an hour outside of Austin, right?
About 45 minutes from Austin, yeah. About 45 minutes from Austin, 50 minutes from San Antonio.
So far enough to get the peace and quiet you want to kind of to grind on a good idea, but still accessible. So that makes a lot of sense to me. How have you started to roll this out in terms of like recruitment? Is it invite only? Is it kind of the YC, like 10,000 people apply and, you know, one is picked? How are you thinking about that? It sounds like it's industry agnostic, kind of, where you're looking for just the right business with the right fundamental mindset as you laid out. Like help me understand that part of it.
Yeah, so working backwards, definitely agnostic to the type of business. When I think about what we do and who we are, we're value investors, and not in the necessarily Warren Buffett kind of Ben Graham value investor and buying lower than the market perceives the value. That's like inherent into investing. I think of ourselves as value investors, and anybody that produces value in the world will invest in if it's the right, you know, team and interest, because it's very hard to not make money in that. I think we've gotten so far from delivering value to the world that just that notion alone is pretty heretical. Now, from the format, we're really interesting. We have something called the Guild at Early Riders, which it's an application that has like a technological application that has all of our investors, all of our partners, so GPs, LPs. It has our advisors, which we have a world-class group. One of them is, you guys know, Gavin Fury on the legal side, because
Sure.
legal is pretty expensive when it comes to any endeavor, especially in the digital asset space. And so we built a big stable there, as well as the operators. And so they're all chopping it up daily on different ideas, different conversations. That whole group will actually be the GPs will look at the applications, but then we will ultimately pick the top 5, and they will be presenting to this whole group. So they can still potentially get funded if they're not chosen as the number 1.
Okay.
But then the number 1 will receive that 2 to 5 Bitcoin and come out for our inaugural cohort in 2026. So that's a little bit about how the process will go. We've had a crazy amount of applications. Bitcoin Magazine, some other publications have picked us up since the launch last week.
That's exciting to hear. A quick question about the 2 to 5 Bitcoin. Is that basically based on the valuation of the company at the time that they receive it? And I'm assuming that's kind of a seed like equity investment.
Yeah, that's exactly right. We initially were looking at a nice, 250K number, but given the status of like everything with inflation, with the market, you think about, you call it next year, as the price of Bitcoin rises, if it ends up being something Bitcoin adjacent, valuations naturally move. And then also dependent on the type of business, because one big opportunity that I see is there's no shortage of world-class entrepreneurs. If we think about just us 3, where were we at 5 years ago, 10 years ago, sitting at a business, probably had a great idea, but there's just the natural inertia of life, of capital constraints. Maybe we didn't hold a better form of money. So those individuals know they want to get out of the traditional rat race, but they haven't been emboldened or sparked with the thought of how they can get support, how they can get the right framework. So I see that as a huge opportunity for something like this. And that kind of endeavor may not need, 2 Bitcoin. If Bitcoin's sitting at $200,000 a coin, they may need 1. But then somebody else that already has a well-fledged team, that has a good idea, that needs a little bit more capital, that might get up into that upper barrier. And then we'll look at a valuation that makes sense to take roughly about a double-digit percentage. We usually generally take around about a 10% on average position, but with the notion that our businesses are less theoretical and more practical commercial applications we know the market needs. The biggest kind of fallacy, or one of the biggest, is in venture that 8 or 9 out of 10 bets go to zero. It's fundamentally flawed. It's a product of too much money in the system. Because when I think about building on-ramp, there's no way in hell I would have got out of bed if I had an 80% chance of failure or 90% chance of failure. And so there's that component. And then really operating, for anybody listening, and for you guys, like, it's again another fallacy built into too much money in the system. The venture really was a cottage industry endeavor, and it's really kind of Frankenstein into a crazy thing over the past 30 years. And the best analogy I like to use is, imagine going to Henry Ford if you're an academic or at a private equity fund, launched a venture firm and said, hey, Henry, I want to take some of your money and I'm going to allocate it across any ecosystem, let alone, automobiles. He'd laugh you out of the room. And probably that's the nice version of what he would do. And so it's this point that you really have to have some level of operational chops, because you have to know back testing a story. Everyone's a good story in 2025, right? Everyone can tell a good thing, but how do you actually discern where the fundamentals are? And have you gone through the progression, the mental maze, to come to an idea that really is needed and people will pay for it?
Well, we're excited to see the growth. for early riders and the companies that get selected. We're cheering for you guys. And I think if we had to name the episode today of Texas Capital Live, it would be Bitcoin is the hurdle rate.
Yeah.
We had Matt Cole on earlier talking about the Strive merger with Similar Scientific, and that was his mantra as well. And I think Michael, you mentioned that earlier, and it's probably our most mentioned phrase for today.
It has been, and I think you laid out really well that sort of once you go through a process of building a business with an element that recognizes the long-term value proposition of Bitcoin, it's hard to unsee it, and then it changes your whole outlook on really any other decision-making process. Like Lee said, we're rooting for you guys as well for sure, but we're excited to just see that first crop of companies come in. Would certainly want to highlight them. And it's awesome to see this kind of community building up as an antidote to, I think what you alluded to is kind of this San Francisco, like way too much money in the system. When it's accepted, you have this 90% failure rate. Like there has to be that look in the mirror moment of what are we doing? So I think you laid it out really well, and I'm glad we're building something different in Texas. So good to have you doing that, man.
Yeah, I appreciate you guys having me on. Been good friends and fans of everything you all are building. We're naturally going to need a touchdown space in Dallas because, again, there's Dallas, a huge market, may fly into Dallas and want to touch base on what on-ramp early riders are building. So it'll be good to connect in a few weeks at the North American Blockchain Summit and TexCap. We're getting involved with both. So appreciate you guys having me on and look forward to talking more about it.
Yeah, no, it's awesome to have you involved in the event. And this is a really important perspective that you're bringing. So thank you, Michael. We'll see you in a couple of weeks for sure.
Awesome. Thanks, guys.
Cheers. So as we work towards wrapping up the Bitcoin is the hurdle rate episode, which I think you rightly pointed out, to me it's interesting to reflect on just briefly on. We've talked about this is the digital gold rush, but we're seeing the same thing happening with the old gold. Like the two, I think gold has actually outperformed Bitcoin. If you pick a certain time frame,
right?
More recently, it's been on a run. My point in bringing that up, though, is there is a general sense right now, I think, of a step change that we are living through, where the old days of, Jerome Powell's going to give a speech today with the Fed. The old days where it's like a group of people at the Fed get together and make up some rate, and we all just are kind of subject to that. The facade there is really starting to crack. I think it's a scary thing. I think it's a necessary thing, and ultimately will be a good thing. And we've got guys like Matt Cole and Michael Tanguma that are making it a good thing by building a new way forward where we can change that way of thinking. And I'm hopeful to continue to pull on that thread and build that narrative. I think it's important for people to really think deeply of like, what does it mean to build and invest for the future? Because the way we've been doing things, the California dominant way we've been doing things, has yielded some excellent results. Nobody can deny some of the companies that have come out of that have changed the world, but something is amiss. And I think we're building something here in Texas that is going to reorient us towards the long term. That's my parting thoughts. What have you got, Lee?
No, I agree. It's a 10-year time horizon, right? We are not, Texas, Dallas in particular, is not going to become the capital markets center of the United States or the world tomorrow or next year. I think we have a 10-year run to really reach parity with say New York or London. And I think that's achievable. We underestimate, we overestimate what can be done in a year and underestimate what can be done in 10 years.
Amen to that. The timing is right for bold, disruptive thinking, and that is what we're doing here. So join us at the TexCap conference. That's where we're going to continue this discussion. You can go to texcapcon.com to register for that. Actually, both of our speakers will be involved with either TexCap or the North American Blockchain Summit, the two events that we're hosting. And so this is exactly the kind of awesome dialogue we want to continue there. So please go register. We look forward to seeing everyone here in Dallas in just a couple of weeks on October 8th for the TexCap conference. Thank you.
See y'all next week.